Put your wagers in. When will the price per share of Tesla stock peak? James Palihapitiya, a venture capitalist who was born in Sri Lanka, makes an amazing forecast, and at first glance, her initial reaction seems reasonable. However, there is more to believe than meets the eye. Though his forecasts on venture capital, finance, and economics are well known globally, we will only be concentrating on one of them today, Tesla, at $10,000. Before we go any further, don't forget to hit the like and subscribe buttons. Stay tuned for more information. Entrepreneur, engineer, and space traveler Chamath, a Canadian-American originally from Sri Lanka, first projected that Tesla had a bright future and that its worth will double or even triple in the coming years. This, he says, is in line with the price of Tesla's shares right now. He not only founded Social Capital, but also served as its CEO. He worked as an executive at Facebook from 2007 to 2011. As per CNBC, he is the founder and CEO of Social Capital, an organization that, in contrast to conventional venture capital businesses, aims to enhance people's lives by tackling worldwide issues. In order to assist investors in funding companies in industries like healthcare, personal finance, and K-12 education, Social Capital was formed. It has since grown to the extent that it now provides funding for other companies, including Amazon.com. Interesting technological advancements like rumours' recently released industrial chain feature are also supported by Chamath's company. This week's big price fluctuations in equities might be found in rumours' brand new industrial chain mentioned, which is an excellent place to start. The industrial chain provides a detailed picture of the problem, both upstream and downstream, so you'll learn a lot from it. In sectors like semiconductors and EVs, where stocks are plentiful, investors can target particular segments of the market more effectively. The link between industries and segments makes it feasible to estimate prices more accurately in less time. Examining research reports, Chamath claims that Kelly Evans' previous interview with CNBC was mentioned through a link in a description of the interview. He thinks Tesla's offer to enter into a transaction is excellent. It's a convertible bond with a 5-year maturity that offers 95% equities, have an 80% upside potential compared to a risk. Maybe one of the wealthiest companies in the world would think about this. Additionally, he stated that he is willing to take a chance on Tesla CEO Elon Musk because the two are friends, even though the data shows that he is a dependable investor who wouldn't risk money on a friend's recommendation. He also mentioned that the convertible bond's yield was 5.5% when he first started buying it. This could mean that he believes in Tesla's prospects. Beyond his acquaintance with seasoned and well-known figures like Chamath, experts in finance have confidence in Tesla's brand value and its potential to succeed where others have failed. Company to achieve. He has said that the company's main goal is to introduce attractive mass-market electric vehicles in order to accelerate the advent of environmentally sustainable transportation. This goal is crucial to Tesla's corporate plan. Tesla's business strategy is centered on direct sales and not franchise dealerships. A major barrier stands in the way of the widespread adoption of electric vehicles. Particularly, the electric vehicle rapid deployment of charging stations is crucial to the company's business model in order to overcome to further build its brand. Tesla has ventured into the storage of electricity for homes and businesses. Tesla approached things somewhat differently. The business wanted to make a car that would encourage people to switch to electric vehicles, not just a cheap car for mass manufacture and sale. The company's business plan was strengthened after Tesla gained recognition in the sector and manufactured and sold its prototype car. Tesla's business model is based on 3 key pillars: selling, servicing, and charging its electric cars. This is in contrast to the majority of other manufacturers' business models, which depend on franchise dealerships to market their goods. Without using any middlemen, customers have total control over the distribution process when they purchase from Tesla. The company has established a global network of metropolitan bases. Showrooms and galleries to display their wines. Tesla thinks it can develop faster than conventional auto dealers and offer a better shopping experience for customers in its retail locations. No possible conflicts of interest exist. Clients only communicate directly with Tesla. As of mid-2022, there were 823 Tesla shops spread over 62 countries, employing sales and service personnel at venues that interact with customers such as stores, Service Plus locations, and other similar settings. Tesla advertises its cars online as well. A Tesla may be customized and ordered online in a number of markets. Tesla Rangers are a mobile technician service that comes to your home to service your Tesla automobiles. Distant the provision of services is becoming more widespread. For example, the Model S's wireless data transmission capability enables mechanics to identify and fix some problems without ever stepping inside the car. A full charge of a Tesla costs roughly the same as a gallon of gas and takes about 15 minutes. The business has established a global network of more than 30,000 superchargers. It seems that the objective is to increase the quantity of electric vehicles on the road by lowering the cost of purchasing and simplifying maintenance. Considering Tesla as a technology company rather than an automobile manufacturer, at least that is the explanation offered for the more than 300% annualized rise in the company's stock price since 2013. The media has attempted to make comparisons between Tesla and other tech companies that saw significant growth at the same period. Even ardent bulls have been surpassed in their expectations by Tesla's spectacular development. On May 25, 2022, with the price of Tesla stock standing at $661.58, Adam Jonas, a testable at Morgan Stanley since the company's founding, predicted that the stock would be worth $103. Like many other companies, Tesla has embraced the disrupt or die mantra of the industry to shake up the antiquated auto industry. Tesla intends to deal with consumers directly for its wares. While Tesla's investors saw their patience rewarded in 2021, when the company earned a yearly profit for the first time, the company's creators and planned products aim to emulate Apple's success and its devoted fan base. However, the majority of consumers are discouraged from purchasing electric vehicles due to a lack of convenient charging options, even though Tesla did not pioneer the electric car or even the luxury electric car. Having to stop and recharge on long trips was seen as a major issue with electric automobiles, so a network of charging stations was planned as part of the solution, keeping Tesla's successful introduction of desirable electric vehicles to the market alive. Now, the company plans to continue growing its network of supercharger stations in the United States, Europe, and Asia. A significant component of Tesla's unique business strategy is its in-house sales and service department. This has contributed to the company's stock price growth since its IPO because Tesla has maintained its position as the leading manufacturer of EVs. Chamath, which is expected to cause the stock price to rise by more than a factor of 10 in the near future. While many other well-known investors and analysts have not sold their Tesla shares, he is among the ones who has. This concludes the video. As always, please hit the like and subscribe buttons if you like this content. I'll see you in the future video.